All right, hello, hello. How is everyone doing today? Let's put this over here. I gotta put all my windows in the right spots. There we go. All right. So, where's this? Stack up and lower. Yada yada yada. Okay. I love it. 9:30 is always when everything blows up. Sounds good. Thank you, Nora. I appreciate it. Got my coffee. Oh, it's a little hot, but that's all right. I'll survive. All right, we'll jump into things. I don't know. Again, today should be pretty interesting. I don't know what Yellen's going to say in 25 minutes, but I'm sure it's going to be interesting. Um, yeah, yeah. In June, yeah, we're on day 2 or day 3 of rain. Like everything is waterlogged. Ugh. It's like, oh, it's rough. I have a game tonight at 8:30 in the rain. I'm like, I canceled practice yesterday. It stopped for like 2 hours. I was like, it figures I cancel, it stops for 2 hours, and then started back up again. But the fields were just absolutely just. I mean, it's just like a mud pit. Like there was just no point. It's like, the kids are going to be just, you know, it would not have been a productive practice. And then we're supposed to have practice tomorrow, but now there's supposed to be thunderstorms tomorrow. I'm like, my God, this is like a week of rain. Like, what is it, Seattle? You know? Um, so today is going to be an interesting day. Like I said, I think Yellen. I don't know. This is the I'm in port. I'm in port. I'm going to move my release of data ahead 13 hours just so I can get in before FOMC. So I don't know. I'm assuming, and again, remember, she definitely has a political, you know, as Treasury Secretary, she definitely has a political motive in everything that she says. So yeah, there's that. And then again, I think FOMC is going to be the big thing. Everybody. I mean, here's one of the big headlines that Deutsche Bank is now basically saying that they're the first big bank to say, "Yep, the U.S. is going into a recession." Um, and it says that the Fed's going to hit the brakes on the economy. It's inadvertently end the recovery. Um, we no longer see the Fed achieving a soft landing, which is interesting because Jamie Dimon said that we would. Instead, we anticipate that a more aggressive tightening of monetary policy will push the economy into a recession. This is right. This is going to be a hard one because um, the industries that are hurting the most are the ones that people are cutting back at, like restaurants and things like that, like service sector. We go into recession, that's even less people doing it. So it's kind of like, ugh. I know a lot of people actually that own restaurants, and it's kind of like, yeah, you had the hardest time during COVID. You survived COVID, luckily, barely by the skin of your teeth. Then you had to go through like nobody wanted to come back and work, right? Because of the policies, because it was like, well, I'm getting paid more to stay home. Why would I work? And then they finally have like overcome that, and they've gotten more or less their staff back. And now we're going to go into recession, so there's going to be less people out buying. It's like, oh man, these poor people, I think raining here 5 to 7 days. I think Las Vegas, I realized, to get 1 week all year. Yeah. Well, like, and then there's like, I mean, the guys in Texas, right? A friend of mine posted yesterday on Facebook, or I saw it yesterday on Facebook, snow or whatever. I don't know if it was snow or like freezing rain that was like actually, like, making the ground whitish. I feel like it was probably freezing rain, not actually snow, but it was like hail, tons of hail, snow, freezing rain, whatever you want to call it, in Texas, in April. So, the world's ending. Um, But other things, obviously, the big of note. Again, we're talking about the prediction of the yield curve, and again, the markets. This is from Bloomberg today. The markets bet the sharpest Fed tightening in almost 3 decades. Um, look at this. The Fed will implement 225 basis points by the end of the year, right? Going from 0.25% to 2.5%, right? Um, yeah. So, yeah, going to be interesting. But again, they're talking about that. Because of it, bonds are getting absolutely just blasted. You see bond meltdown. And again, as you should, as interest rates go higher, bond values go down. So, yeah, bonds are getting blasted in the whole thing. You know, this is an interesting one as well. If you listen to the Nadex presentation, um, Russia, trying to like. Here's the thing. Typically when you have bond ratings and things like that, you don't want to default because you get a rating, right? If you are forced, like if they refuse your payment, I don't actually like. Here's the thing: if you try to pay your credit card payment and your credit card says no, we want to jack your rate, so we're not going to accept your payment, you can kind of refute that, and it doesn't count against you. So I don't know. It makes no sense to me. I don't know why they're doing this because it's like, fine, you won't take our payment, then don't take our gas and oil either. You know, like I don't know. I mean, at this point, I love the comments. The comments are great. Like, um, as I said, like you've already frozen their funds. Use their frozen funds. Force their like. If you've frozen their funds, you control their funds. Use their frozen funds to pay their debt payments off, so you're becoming whole again. And they had to pay it anyway, so it's not like it's could there be a legal challenge of stealing? Sure. But if you've frozen it, like this is not illegal money. This is money that they have banked over there. Like it's not drug dealer money, right? They've sold gas and oil and other things and then banked it over there. It's not illegal money. So you sanctioning and freezing their accounts, you're basically you're basically stealing. Like force their payments, drain it, and then tell them that they're not allowed to make any more investments. That's not illegal. Like if you don't want to allow another country, do it. But like, I don't know. This is I don't understand. You're like, oh yeah. We're just not going to accept your payments. You're gonna default because we're not going to take it. Like, okay, they were willing to pay. You didn't want their money, so yeah, it's dumb. It's ridiculous. Some of the comments in here are great. Like this guy, and he's like, listen, he's like, he's like, yeah, this is short-term damage, but long-term gains. If they survive, they're the big winners in this whole thing. And he's like, listen, I'm not pro-Russian, but this is you're giving you're making pro-Russian policy at this point. So, um, meanwhile, China's just sitting over there like, yes, we will take over the world soon enough, right? This is an interesting one too, and I didn't actually factor this in, right? German Chancellor says that we are delivering everything from the German army stores that is available and rapidly effective, right? He reiterates that NATO will not become part of this war, right? NATO is never getting involved, right? Right? But he says, Schultz says, until you withdraw your troops from Ukraine, we will continue to support Ukraine in every way that we can. They're giving everything that's available. And I'm kind of looking at this going, huh. You're emptying your stores to give everything that's available and rapidly effective. So if it becomes a war of attrition, by leaving troops there, and again, is Russia now weakening NATO and all of the European allies because they keep supporting the Ukraine? It's like, huh. I know Germany is going. They've already like increased their defense spending and all this other stuff like that. Like Germany should be thanking Russia at this point with the amount of money that they're going to make from, the additional $30 billion or whatever it is in military spending. Right? Their industry is like, thank you. Right? They're happy about it. But it's interesting that we're going to give everything in our army stores. It's like, huh. And meanwhile, China's just sitting there like, yep, we're not giving crap. We're growing. Got it. We're good to go. So, um, yeah, I don't know. U.S. Russian funds to pay down U.S. debt. I could see that happening, but we'd still spend and print too much. Yeah, no, it doesn't matter. Yeah, it doesn't matter. We'll just print more. But I think the big part of it is, and again, Dan and I talked about it, and Dan was like, "Yeah, you're absolutely right on this one." He's like, "You should talk about that today." I was like, "All right, I can." Again, if the U.S. is, the dollar, there's no doubt it's weaponized. There's no way it doesn't deserve to be the reserve currency anymore. And again, that's not anti-American. That is 100% pro-business, right? If you are going to use it and attack people using a currency, it can't be the reserve currency. That's why you have something like the reserve currency. The reserve currency is supposed to be kind of the equalizer of things, right? Like gold. If every nation uses gold, that's like your reserve currency, right? But now that they're doing that with the dollar, I mean, God, phew, if the dollar gets unhinged, if we stop using a petrodollar, which I think is the probability is getting up there at this point. Um, if we went under the same rating agency that all other countries did, the same rating rules that everybody else did, our rating is horrible for the amount of debt that we carry, right? The amount of debt that we carry, yeah, it's insane. It's off the charts. But because it's been the reserve currency, it was always considered that it has a good rating. There was no risk of default. But if they're not using dollars anymore, it drives the demand for the dollar way, way, way down. Like I mean, phew, talk about massive inflation. It's insane. I mean, it'll wreck our economy, and that's what they're threatening. That's what they're going at right now. And again, you say that that's not going to be true. China's already stood up against us. India's already said they'll take payments in rubles, so they're siding with Russia. All of OPEC says, "Yep, we'll take things in other currencies besides the dollar." A lot of other countries, and again, we don't. The United States is not the most loved country in the world. If you talk to people outside, we don't have that many friends. Most of South America would be like, "Yep, we don't need to use petrodollar. We'll use other currencies." Right? So, interesting scenario we're getting ourselves into. So. Yes, and and nobody say Bitcoin. Please don't say Bitcoin because it's banned in many countries. So Bitcoin is not going to replace it. That's not going to be the world currency. Um, I think that's closer to getting banned than the dollar at this point. So there's no simple black or white solution. To this it's not easy. Um, now, Ernest, you're right. I mean, there's not a simple black and white answer, but I think what they should have done from the very beginning was said, listen, you know, I don't know that NATO should have got involved, but there should have been some type of security agreement. If it basically said, if you send a tank, we're sending a tank, is what it should have been from the very, very beginning. Um, we are purely going for defensive purposes, but if you send a tank, we're sending a tank. Do you really want to go there? You know, um, yeah. I just think it should have been very, very clear. It should have been, it should have been carrying that big stick very, very early to kind of avoid this all from the very, very beginning. If you can stop it in the beginning, it's the same thing. I mean, look at the Cuban Missile Crisis, right? We blocked them, so we didn't get to this point, right? And it was like, oh my God, are they going to shoot? What are they going to do? And Russia turned around, right? If you say, listen, we will protect this country, you know, they are recognized. And here's the thing, they are a recognized country, right? Maybe not NATO because that's a bad thing, but could a country have said, "Listen, we have trade agreements with them. We want to support them. This is not a NATO agreement. This is us supporting them with a mutually, a security agreement. If you send a tank, you're going to force us. We have to send tanks if you send tanks, right? It was the passivity that I think has made this all worse. And it's funny. We're going to ratchet up the sanctions. We're going to ratchet up the sanctions. I don't know if you saw today. You know what our ratchet up sanctions are today? We're going to put sanctions on Putin's two daughters. I'm like, wait a second. We put sanctions on a 24-year-old oligarch's daughter who's a social media person. We put that on there 2 weeks ago. We haven't attacked Putin's family yet because they've obviously profited from Putin being in a good position. The sanctions are a joke. Like it's embarrassing at this point. Um, yeah, it's embarrassing. Um, that we're now we're gonna go after Putin's family. It's like, wait a second, really? We've gone after oligarchs' families because they were easy targets because they were successful on their own by having being social media stars. Wow, wow, good job, guys. I don't know who does the sanctions, but they are also idiots in my book. So yeah, so we'll see. Right now you can see U.S. traders online. You can see that the dollar gains are going up across the board. Obviously today Yellen's going to speak or we're going to get the headlines in 12 minutes, and it's going to start rolling through here. Harker Economic Outlook of Delaware and the Nation, great. After obviously today's stuff, we have unemployment claims. We have Bullard speaking tomorrow. I cannot wait to hear what Bullard has to say tomorrow. Um, I'm actually hoping Bullard calls everybody on the Fed, inept. I'm waiting for that stand because they're all like, yeah, we need to tighten. Yeah, we need to take a stance on this. And he's like, yo, I've been saying this. Like, we got to take a stance now because you didn't do it last time. Like, I really, really hope that he makes a comment about the ineptitude and how people have lost faith in the Fed. Because that's kind of where we're at. And then obviously Yellen is speaking again. I don't know if this one's considered tomorrow. Oh, she's due to speak at a crypto. So Yellen is speaking about cryptocurrency policy and regulation tomorrow. Um, yeah, I don't even know if I should say anything. I feel like Bernard. I think she's the perfect person to talk about it and talk about policy with that one. Do I think Yellen has any idea what cryptocurrency even means? No, no, yeah. Sorry. I think that the Fed should handle that one. I think Yellen should stay out of it. Um, this goes back to senators questioning Facebook programmers about their algorithms and how the algorithms work. They were like, "Did you hear anything I just said?" They're like, "Sir, I answered your question. It's not my fault you don't understand it." So, yeah, go Yellen. Yeah, I don't think she's inept enough to be able to talk. I don't know. Like, yeah, she's like the female Biden as far as this goes. The Treasury Secretary position used to matter. Like when they spoke, it used to be like a market moving event. Now it is zero. She's absolutely just a token individual in that point in that position right now. She has no power left. It's unbelievable. And again, you know, Biden picked her for a specific reason. I'm glad that he checked his box off, but basically have turned the position into a non-factor now. So, yep. Here it is. Oh, here it is. Oh no, wait, this one. Oh no, this is Euro. No, where's the new sanctions thing? Oh, it doesn't say it in here, but yeah, we'll see. All right, let's go over in the charts. So, I mean, first thing we got to talk about today, obviously the VIX. It's coming back a little bit, but man, did it get jacked up yesterday, jacked up today, and we haven't really heard much else today. Again, it was due to pull back just a little bit, but 9% is 9%. It's still a lot. I mean, that is a heck of a move. You can see in the last 2 days. And the other thing too is, if you look over here, all the headlines. You don't really see any headlines talking about the peace talks. Where are all the peace talk comments? Right. The only thing we saw yesterday was what the Kremlin saying that they had no, there's nothing in here talking about, we don't know what's going on in peace talks right now. We have no statement to talk about what's going in there. And then Zelensky yesterday talking about, hey, there's possibly no meeting going to happen. And again, there's no way Putin's going to meet with him. No way in heck he's going to do it. He's not dumb. He may not be all, shooting on all cylinders, but he's not going to leave his safety to go there. No way. But that's it. It's kind of like, hey, where's all the peace go? So not surprising that the VIX is up. Dollar pulling back a little bit. We talked about it kind of rolling back around from that almost $100 mark, or that 100-point mark. So again, I kind of wanted to see. I'm hoping that Yellen says something that drives it back down again. I'd really like for her. Honestly, I hope that she's still. Maybe she used. I don't know. Maybe this is a possibility. Maybe she's using Biden's speechwriter. And she'll say something, and that'll drive it down, and then give us good opportunity to be able to get long the dollar for FOMC, right? Because you know how Biden says something, it's like no, 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 everything that guy said was just wrong, right? Maybe she'll use that guy, and then the Fed will come out with their minutes, and it'll be complete opposite of everything she just said, and we'll get an awesome trade from it. Uh huh. Uh huh. Well, Sean, she has the position for one reason. Right? Everybody knows the reason. Nobody's going to say it because it's not politically correct to say it, but there's one reason why. If you look at all Biden's appointments, there's a reason why he picks, and it's for votes. And that is it. And it's sad. And there are people that have already called him out on it. And it's also the reason why there's going to be a major shift in Congress. And people are going to complain, and people are going to riot again, right? There's going to be riots again because the group that really did all the rioting the first time was the people that were pissed that the election was lost. It's going to go back again, and they're going to wonder, why did this happen? How can people be this dumb? Not realizing that, again, it's looking through, rose-colored glasses is really what it's going to be. But yeah, there's everybody. It's pretty much a clean slate across the board that they're expecting everything to switch. And now the big question is it only going to be a 4-year presidency? Harris is. I highly doubt Harris even gets the nod at this point. I mean, obviously you have to put the current president up there, but if they lose, I don't think everybody's like, oh, this is so she could be the next president. I think at this point, it's especially with a recession, pretty much guaranteed that she would not be. So it's nice thinking. Yeah, it's nice thinking, and like I said, I don't care what. Like I said, there were promises made to get votes, and a lot of the people that voted for you are now the people that are hurting most in this country, and they've done absolutely nothing but make it worse. So for those people. So again, people vote with their checkbooks. So it's and again, you're going into a midterm election at your lowest job approval rating is not really what your party wants. You know, um, yeah. And now the whole thing with the student loan debt, we're going to push it off 3 months. Again, what type of precedence does that set? Right? You take on debt, and then you're going to bail out these people that had the debt. Again, if I get it, you should have if you want free colleges and everything like that, great. Make it free from now forward. But you can't just forgive somebody's debt. They took there are people that didn't go to college or didn't go to expensive schools because they couldn't afford it, couldn't get the loans for it. I'm sorry, but if you pay off a bunch of rich kids' debt with with student loan forgiveness and right across the board, it really shows something that you don't necessarily care about equality. So, I think that's you take out debt, you have to pay the debt, you sign the debt, you got the benefits of getting that that higher level degree in life. Um, I think it's absolutely ridiculous that you're like, yeah, we'll just write it off for them. Yeah, it's no big deal. We can put their student loan. They can't buy houses and we can't do this. It's like, well, they took it on. They weren't forced to do it. It was voluntary, right? And there's benefits and perks and things like that, long lasting perks. They can, they get jobs with companies. They can go into retirement. It's if you don't see that that's inequality, I really I don't know what to tell you. You know, so um, yeah, it's funny. The side that supposedly stands for the most inequality or equality is providing the most policies to make more inequality. So I don't know. It's like wow, huh? Look how that works. And then it's like let's tax the rich because we need more tax money. It's like why? They already pay 10 times what I pay. And if you're like they don't pay the whole thing with Warren saying Bezos doesn't pay his fair share. Okay, well whose fault is that? Is it Bezos's fault that he doesn't pay more? Or is it the lawmakers who make the rule? Oh, wait a second. It's the lawmakers. Oh, it's you, Liz? Lizzie. It's your fault, not his. Um, Anyway, starting off with the Aussie dollar, we'll start there. And again, we're probably going to explosions in 5 minutes. I support figures of student loan. I just said the colleges forgive slash pay them off. Yeah, you know what? I my take on it, Neuro, is I'm okay giving businesses tax write offs to pay down student loan debt. So, like, if you work with a company, just like a retirement plan, like when I first when I first graduated, it was like, yep, we have a retirement plan, and it was a retention method. Like, nobody stays at companies anymore; it's 2 years. But as far as retention, you work with some companies, and they'll pay your student loan off, and it's part of your compensation package. I think that that's awesome. That's great, right? Knowing that I could get a job where they're going to pay my student loan debt off, I think that's great. I feel like they should get the incentive, but I don't think you give the individual in this case just the write off for free. I think you incentivize companies to hire people that go to college that know that they're going to get their student loan paid off. That's how you get ahead. That's the only way to do it. Anyway, now that you got me completely up. Aussie dollar. We talked about a Harry Potter trade based off a basing level yesterday, and we're almost all the way back to it. It didn't give us a full pullback, but again, this is one of those scenarios where we hit it, and kind of was like, oh, do we just go short? Looking for that retracement. I was hoping to go all the way down and tag target before today. It didn't yet, but I still think that this one has the ability to drop further. Gold's up a little bit. I think gold is up a little bit higher now in preparation for it being crushed down. Um, but right now, it's kind of like, oh, we're in an area where there's buyers. Should we be going short the dollar? I don't know. For Yellen, and again, I would not be surprised if when Yellen releases all these notes, if this does pop up a little bit ahead of time. Um, and again, that's more in preparation for dollar strength coming in. Everybody assumes the dollar strength's coming. I think the pace and how many times and things like that. I think that's uh, they could go in so many different directions today. I feel like, but again, this was one of those ones we were looking for reversal. We ended up breaking through that level. We did get a pullback, and again, a couple ways you could have played it was the break of this level on the pullback, and again, it dropped. Look for the new stabilization point. You could have said, well, there's your stabilization point right there, and there was a touch, and there's your touch going down. I do think we still need to watch out for the level right here. I think this level at 75.45. Definitely an area you need to watch out for. Again, there was a large spike out of there. There was some basing that it came through. And again, look at it. It's starting that, she's coming out in 2 minutes. I don't think we'll get all the way down there, but I wouldn't be surprised if it doesn't just drop. And it's funny. Everything is in the green right now. All the major currencies are in the green except the Aussie dollar. It's like, can the Aussie dollar just go up just a little bit and then everybody could be in the green? I love that. This is, you have all the counter currencies in here, and everything is green. I love when all currencies are up in the world. So, but yeah, so we'll see in a couple seconds. But I think watch out for that today. I really want to see what happens after she speaks or after we get like the notes from her testimony. I'd like to see where we go for 2 o'clock today. Now, it's a very interesting trade setup. I mean, obviously, we could draw a zone and say, well, wait a second, there's definitely basing here and there's definitely a bit of a pop. And yeah, that's one potential area. Like I said, if we come down and she doesn't, if she says nothing that really matters, and we come in basing through, this was an old trade. We can remove this Harry Potter. It's done from before. We got a lot of space until this next kind of level that was, providing stabilization. Really, from here, you're talking about 60, 70 pips. Is saying that we're going to do 6.5 raises in a row, is that going to bring enough dollar strength to blow that out? Yeah, absolutely. The problem is the VIX is so high right now. There's so much volatility. I mean, we're at 12% right now. 12% volatility. That is so much. So the spreads are going to be bigger. I mean, the question is, it's like, oh, can we get into? Question is, how do we get into this at a time when the spreads are not going to be insane and the volatility in the options is not going to be insane? I'd like to get short, and again, if you're short from yesterday, I think you're in a decent place. But again, interesting play. And again, I don't want to. With 2 minutes, I want to be like, hey, listen, let's just go. But I do think, where is it? 14 right here. I do think that this has the ability to kind of shoot straight down to this level. All right. All right. Let's see. Has she given us anything yet? I was waiting to see the comments kind of roll in. May take a couple minutes. May take a couple minutes. So anyway, that's Aussie dollar. Aussie yen, same area we talked about yesterday. We were talking a break of 93.70. I'm sorry, 93.60. It hasn't triggered yet. We'd like to get the pullback through. We got the same Harry Potter based trade all the way down to 92.49. Again, it just hasn't triggered yet. It's still in here right now. I think this one is still on the table. Um, you know, the colleges. It's yeah. Don't look at don't look at college inflation, college education cost inflation. It's insane. Yeah, yeah. There are so many things wrong with like college pricing and admissions and all that kind of stuff. It's insane. Everything, everything. You know, not just academics, sports as well. NCAA, right? All the Final Four teams, each of those schools made $10 million by being out there. The athletes made zero. It's like, wow, your school just made $10 million. Are you gonna? Does that give you $10 million worth of scholarships next year? No. Oh, it's just the profit. Oh, okay. Are you going to raise your rates next year? Yes. Oh, okay. Yeah. So many problems. This world is all jacked up. But again, Aussie yen still the same kind of short, and again that would coincide with the Aussie dollar as well. Again, we have that same short, and again this would be more from here. Um, Again, I see this one coming down today as well. Euro pound. So euro pound is kind of flatlined off from where we were yesterday. We can drop just a little bit lower. We're able to make it back to a 23.6 retracement. This one is again very interesting position. Now that the euro is like, no, 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 we're not going to take your bond money. It's like, all right, what's the next shoe to drop? We didn't get the shoe yesterday. Still kind of waiting for the shoe to drop today. And what I mean by that is, I'm kind of curious to see what Russia is going to say in this whole thing. It's like, are you going to block our payments? Okay. I don't know. It's kind of like, well, you blocked our bond payments. Does that mean it's not due anymore? Like, if we've defaulted, so what? Like, if they don't have to pay those things off, could they start investing like that much? I don't know. Like, how much was it? 649 million, million euros, right? Since they rejected that payment, it's like, listen, okay, so we defaulted. You're not going to accept the payment. You don't ever want the money. So does that just write our debt off then? What if they took 650 million euros and invested it into Russia's infrastructure, right, to make their country better? Who does that hurt more? Not does it hurt the bonds, the banks, the people that loan the money of not getting the 650 million, or does that hurt Russia by making a 650 million euro investment into their country and their country's infrastructure? I don't know. I feel like it's like, man, are we trying to help them? I don't know. But anyway, I think when the shoe drops, when we figure out what's going to happen with that, I think this continues to go lower. But remember, 83 is a big a level in the past where we tend to see a bottom with the euro pound, and we're kind of down there right now. And again, fib wise, we kind of drew it. You can see there's many different areas and bounces in here. And again, the big one's going to be right down here. Oops, I didn't want to move that. I just wanted to move this. You can see it's coming in at 83.18, right? 83 is sitting right there. So you can see it's the same level. But 83 is a major, major level. Right now, I would say I wouldn't really consider either one of these strong or weak. If anything, I would say this push up with a fair to go higher here. Again, we want to get what this is showing me right now is with it pulling back. I'm more interested in playing the euro dollar for the FOMC note today than I am the pound dollar, if that makes sense. Okay, euro yen. So there was our position from yesterday, right? We talked about it coming through. And actually, yesterday morning, we were sitting, actually, 12 o'clock, we were talking about right here, about 135 being at a 50% retracement level. It then ended up going just sideways, but then it came up, and at about 10 o'clock last night is when it finally triggered, right? And again, this is our style of trading. It's not a do right now. It's an if this then that, right? There's your 1 to 3 trade. Actually, that's 1 to 1 to 3 is right there. You can see when past, you're immediately out of the trade. So again, you're 1 to 3 retracement, but at this point you had 1, 2, and 3 hits, and guess what? Number 4 broke. Now, it did give us a little funky Harry Potter came up, and again, it did give us an entry long. Did go a little bit lower at that 5:30 reversal time frame in the morning, and now it is pulling back down as we are seeing again strength come back into the market. So again, hopefully you guys were able to grab this one from yesterday. It's an easy Harry Potter based trade. I'm sorry, an easy retracement based trade. Again, demand zone confirmed, confirmed. 50% retracement all at the same time. If this, then that, set it, forget it, out. Okay. So now I'm gonna leave it there right now because I want to see what it does if it bases in this level. There's obviously some basing going on right here, and again, that was where the bottom was of the kind of push. So kind of curious to see what it does. In regards to its current push. So let's remove. I'm gonna take the big one out. I actually don't care about this one anymore either because I'm not worried about the 78. Let's run it from bottom to top now. Yeah. Yeah, that's what I was wondering. The level that it was popping through, I don't love the level, but it is on the other side of the 50, kind of hovering around the 61.8. So it's like, yeah, there's basing there and it's hit it and it's confirmed it. Wonder if that's what our downside target is right now. Right? Looking for this one short to come down to 134.82. Hmm. It's only about 25 pips more to go. Hmm. I don't know. I have to see what time we hit it. Right? I'd be looking at that level. I think we get enough strength to come down to that 134.82. Um, Not as clean as yesterday's trade setup. And again, yesterday was a nice little trade. Not as clean, right? Not as clean. But we'll see. It is definitely level, something we got to respect. You know, if it can not go down and blow this up, this could definitely be a European session open trade, right? Something along here with what is the news? Um, oh yeah, COVID cases. Not concerned about COVID cases and death. Not concerned about that one. Yeah, this could be. I mean, I don't know. European session open. This could be a decent level. It's one. It's all right. Right. It's okay. But I want to see what happens now if we can base through this level or not. Euro dollar. All right. So euro dollar. Pretty easy draw on this one. Like I said, overnight push. Europeans stepped in right down here. They kind of put the new bottom in, right? Right. The 530 reversal was actually a pullback. Actually, the 530 was kind of right here. It did its pullback, right? And then continued to push through. And again, this one had a couple different. I mean, you could drag a couple fibs on this one, but you're seeing it reverse. Actually, I think it hit the 50 on the way up as well. Yeah, it hit the 50 on the way up as well, right around that 6 o'clock time frame. So this one's kind of been bouncing all over the place. I would say right now, I'm kind of hoping this one rallies up a little bit. I'm looking to get short the euro dollar before the news today. I mean, hopefully they don't. I don't know. Let me see if Yellen said anything yet. Has she blown this completely up yet? Okay. All right. Barkin is now. It's time to start normalizing rates, right? Housing demand remains high. Supply is this. We're starting to see some cooling in the housing market as rates rise. Of course, economy is no longer in need of aggressive Fed support. Eh. Honestly, it's time to start. Honestly, this is the generic. Yeah, we're starting to do this, and yeah, we need to do like so. This is a generic statement; doesn't really tell us one thing and the other. Obviously, we're seeing this. You know, again, if you guys haven't looked at refis, they've definitely gone back up again. And the reality is, we haven't even started raising interest rates yet, and they're already spiking again. So yes, I would say the supply will start increasing because if people are not buying, we're seeing a cooling, which means the supply will start to increase. Not a problem, and the economy is no longer in need of aggressive Fed support. Obviously, yes, we all know that. We've seen that. I'm curious to see what he considers. This is a. I would actually say if I had to put a label on this, I would say this is actually more of a weak statement than anything else. Why? Because he's not really saying anything. Yeah, it's time to start normalizing. Yes. She looks like a peacock. Yeah, we're not getting headlines. I wanted real headlines. Come on, give them to me. Give me the headlines. She's not going to do it. Anyway, before FOMC meeting notes, I'd like to get to short this. So I'm actually okay if this one comes back up. I don't love the double top on this one, right? The mirrored wicks. But if we do come back up to the 50, in preparation for this one, I think it is a standard. I think it is definitely an area we can take a drop from. The zone itself is only 9 pips, so rather small, easy trade to the downside. I think this one has the ability, again, if they do what they should do, I think this one has the ability of getting back down and touching this 108 today. It's 111 pips. Can talking about raising 0.5, 0.5, 0.5, 0.5 get us down 100 pips? Absolutely 100%. It can do it. So I'm kind of looking for a major, major drop in this one today. If they come out and say, we're going to stay with our 0.25 plan, then vice versa, we jump back up over 110. I don't know. I don't see any, maybe they'll say it. I've been wrong in the past. Maybe they say it, but I just don't understand how they can make a comment like that today. And again, the market has factored in some 0.5, but everybody's talking about the pace and the 0.25 is on the table. I think once they start really talking 0.25 going, or 0.5 every time, I think the market's going to be like, wait, you're going to raise it 2%? Holy crap. Are you serious? I think that's going to drop a lot of these down. Pound yen. So pound yen from yesterday, we talked about that 50% retracement level, and it did. It moved about, what did it go? It went to 1 to 1.5. So this is probably a trade that you would have got stopped out on at break even. And again, it versed. We did see we know that the Aussie yen took a little bit more time to do it. We're still kind of hovering around that same area. So again, I would say we can remove the profit target right now. Again, people, there will be people that are doing the 50 through 61.8. Unfortunately, that's 66 pips. If you wanted 66 pips worth of risk, woo, that's a lot. I'd say right now we're seeing kind of the yen strength kind of come back in a little bit. In all honesty, I'm really, there's a couple areas of buyers in here, and we have some basing here, right? We got a little bit of basing here, but really, I think the next major kind of area, if you just kind of take a step back and kind of look at where your basing areas are, this was a big basing area, right? We kind of had this kind of big chunk of basing down here, right? We're kind of in this basing area right now. So I'm kind of just, being conservative. I'm looking at this right here and saying, well, that's kind of an area right there. There's a lot of basing. You can see there's definitely some buying going on there. And then when I take fibs, and again, we know we're at the 50 on this direction, take it from bottom to top, and we'll take it from here because that's where they were turned around. You can see that level also comes in right at a 61.8. And when we box it off like that, you can see, wait, 61.8, look at, there's a touch right there. I think we're looking for, opportunity to come all the way down to 106.56. Looks like a lot on this chart, and it is in reality. It's about 133 pips. But with some major yen movement, major yen strength coming back into the market, that's really the next time that we have like some true confirmed things with any type of other technical confirmation, right? We have our charting confirmation here. We have our indicator confirmation at 61.8. I think that's the next area we look to go long from, right? So it's I would say right now it's a short target first, but there's potential that this could be a nice little reversal level. And again, especially if this is going to be the top. So again, keep it on your radar. We can remove this. I'll just take that one off at this point. This is kind of our new area for what we're looking for. Okay. Now, could this turn off the 23.6? Yeah, that's also an area that I wanted to bring up. There's a small area right here. Again, as people are going to be looking for this one to kind of explode further, they're going to be looking for the pullback to this one. Again, a standard pullback is 23.6. There is basing there. It has been confirmed twice, so there are buyers there. The question is, with something like FOMC, is that little 30-minute level of buyers going to be enough to jack the yen around as a proxy to really send this higher? Can it happen? Sure. Sure, it could. But again, a 30-minute level with something on the magnitude of FOMC, not necessarily as strong as either. So just watch it. And again, if you guys understand option products, how much does it need to move now? 28 pips. So in 4 hours, can it move 28 pips? Sure. Could there be a long position from here in time for FOMC? I mean, yeah, if you like it and you see the yen strength coming back in from it, your 1 to 3 gives you 47 pips to the top side. Could you get something there cheap? Sure. I mean, there's plenty of liquidity in the pound yen, so it could be something worth taking a risk on. Again, it's a proxy play, but at the same time, I think the yen's going to get some pretty decent movement from it. And again, are we really seeing? I mean, is there really I don't know. Is there really a truly yen strength coming into the market, or is it just profit taking right now? I'd say it's probably just more profit taking now. Pound dollar. All right, so pound dollar. Target was hit. We talked about 130.60 yesterday. We were sitting right here yesterday. We talked about how we were getting close. And again, fib traders, unfortunately, they missed it, right? It came in, and again, 12 o'clock was here. We did get the pullback. Excuse me, we did get the pullback, and we mentioned two different levels. The 103.60 we hit. Um, Kind of the same thing. You say, well, is this pound strength or is this pound weakness? No, no. Um, this is purely dollar strength and the market trying to pre-position, for it. As you can see, though, if we would have taken, I'll remove this just because I'm gonna pull it back, peel it back a bit. Again, it was a level that we were looking more for a Harry Potter because it had sliced through. Had we taken more of a near term, right? Here's your 5 o'clock, 5:30 window, right? There is your trade right now that you should be in. And again, this is really a 5:30 reversal from the European market. It went straight up. Their 10:30 reversal is 5:30, pulled back down, established a new level, descending wicks. I love that in a zone. And you can see we came right back up again and grabbed it. And when you pull fib levels to this, you can see that it also happened to coincide with the 23.6. So a level was formed on the 23.6 at 5:30 in the morning. Came up and touched it at 9. I don't think we're out yet. No, not yet. Right there. There's your 1 to 3. So again, early morning trade setup. You guys could have got into it, and actually you could have done it. You should have grabbed it around 8:30 this morning. But again, yeah, pretty simple, right? Zone established using the 23.6, 5:30 reversal. Plenty of volume in the European session, and then again we kicked off the U.S. session right there. And again, in a method that we assumed that we'd have dollar strength coming in today. So yeah, that one should be, you should be good. Again, profit target, definitely looking for it down here again, the 130.60. But again, two hits. It hit it yesterday, like we mentioned, and again, it's getting ready to hit a second time. Dollar CAD. So yeah, check out dollar CAD. So dollar CAD, we hit it, we bounced off that level, and then really just became just massive levels of chop. And I talked about how 125 was going to be a level that we were going to have major problems with. It's a huge psychological number, quarters theory. It's kind of a big level. Oil is up 1.5%. We're seeing dollar strength come in, and again, it's the same dollar strength. U.S. market, interest rates being raised by 0.5%. Is kind of the world on everybody's tongue. What do you do with it right now? I don't necessarily care. I mean, we're at the 61 right now. I'm not as concerned about the 61.8. Like I said, there's many other things going on right now. Yeah, you can see that's what it went off of. It's a 23 continuation, but was it a good 23? Not really. Chop, 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 and now we pull it back up again. You can see it's kind of the top. So I actually don't like dollar CAD today as much. It's showing that it's up 0.18. We got oil inventory coming in a bit. API is expected to be a surplus. I'm wondering. Yeah, Canada dollar. Yeah, see right here. Look at it, 9:30. Canadian dollar steady is focused on Fed minutes. Yeah, I think that's. I mean, I don't actually know that. I don't think that oil is going to be able to move it today. I was trying to think if oil is going to be able to move this one, but I feel like it's not going to be able to today. Just because, like I said, again, they're saying it here. There's going to be so much emphasis. Are you going 0.5? You going 0.75? Right? God, imagine if they went 0.75. How awesome would that be? Oof. Hmm. Yeah, I just feel like this is not the one to play today. Um, hmm, yeah, yeah. I don't know. If I had to make a call, I still think 125 is going to be an area to watch out for. Again, there are some sellers coming in up top. I think it has the ability to go higher today, but if it goes too much higher, the value of oil is also going to affect this one. I think it pulls back down again. So hard one today. A lot of different factors with it. Dollar Swiss, again, we mentioned going higher. You can see 92, a lot of basing. Love this. And again, confirmation trade through the top. Yesterday we were sitting right here. We talked about it basing. And again, we got the pop through. We talked about this level that we talked about having an issue going through. And you can see it got turned back, broke through, and now is using that level. I'm okay with that. I'm glad that we kind of cleared through here. I'm not as concerned about the 78.6 anymore. Now I'm kind of turning it around and saying, all right, we talked about dollar strength coming in. We got some room to run. We knew that. It looks like we have two levels. We got a little bit more of an aggressive level coming in at 93.62. And then we have a larger level up top. And I think I'll put the alert back on that one. There we go. Alert's back on. We know that we got a level up there that, again, it's been turned around one, two, three times, actually four times, but it had a nice little reaction off of it last time. So it's a level that I kind of want to know when we get there. It's not super far away, right? It's only 35 pips. FOMC can absolutely blow through this like nothing. Like we may not even feel it. Like FOMC levels are going to be much, much higher up. And again, this one kind of pushed. I'd say the FOMC levels are, yeah, FOMC levels are both these two up here. Do I have a thing for FOMC? I should just put the garbage can as FOMC. Um, we're going to put these. I would say that these are the two. These are our FOMC levels up top. Okay, they're far enough away. They're about 100 pips. But I want to see if we can rally up into these levels beforehand. God, if they come out with a weak statement today, it's going to be like frustrating. But yeah, and the only reason I say that is because again, we've had so much movement. So many people are like, "Yep, it's coming, it's coming, it's coming, it's coming." Market is kind of prepared for it. So yeah, I think there's something going on here. And again, I like this 92.90. We talked about it, the basing, the touch. It's confirmed there are buyers there. Definitely gives us the ability to take this short next time we come through. Okay, right there. One of threes there. It's perfect. It's ahead of it's ahead of time before there. And again, it's a level that we're going to put as an alert as well. We're going to do HP confirmation short. It helps when I can spell. Confirm short. Okay. All right, and then dollar US. So love this one. I love that it came up and based here at the 61.8. I love that it touched it, it touched it, it touched it again. I also like how this one is coming this direction. So if we didn't have FOMC, I'd be all over this one for a short. I do like this for a Harry Potter trade in the future as well. And again, this will be when we finally can break through and kind of pull back to this level. I think this one is going to end up being a break of 123.50. Again, psychological level. It's good. Remember, the yen's not really in trouble until 130. We have so much room on this one. But love the pop. Love that it based in here and love that it touched those people, those buyers. It eventually will fail. I don't know when it's going to fail, but when it does, I'm going to be looking for this to kind of blow through. Let's see. Let's set this up. 1 to 3 is right there. Again, profit target on this one should be sitting right here. And you can see, look at that. Ooh, actually, it's a little bit higher than that. There. There you go. Look at that. Gotta love it when our 1 to 3 target is before where profit taking is coming in. This is another one. Again, we could set like a horizontal array on this one as well and set an alert and talk about the same thing, right? Whoops. HP confirm short. Kind of another position there. And actually, this one will pull down just a little bit lower right there. All right. Again, kind of the same setup. I like how there's a top on here. Does this one have the ability to go higher? Sure, I think it does. Unless there's a major disappointment today and the yen, pull some strength back in. It's an if this then that. I don't know if it's coming in today, but when it does finally break through and pop that trigger, that's when we look to go short this position. But it's 123.50, bringing this one down to a target of 122.91. So you're like, wow, that seems like a lot. 60 pips, right? 60 pip runner, not too bad, particularly in the dollar yen. So let's look at oil real quick. We got a couple minutes. Look at this one. Oil's already starting to do its thing. So yeah. So oil came down. It ended up touching the 102 level. Right now, let's remove all these. Let's look at this. I'm going to pull that off. Let me see. Can I see anything here? Not really. Not even close to anything. Let's go to 5 minute. There's a small zone there. I mean, there's a small zone sitting right there. Right? Let's see if we got any hold. Right. Trying to get it right on. It's 3.03. It's whatever. So right now, that's what we're looking like. Again, has it slowed down? Has it stopped? Has it paused? that's what the strategy calls for. The answer is not really. You know, 10 minutes before we did pull up into a small zone. It is a 50% retracement from kind of the more or less overnight, right? Um, so again, will it be a trigger for some people? Sure. Can it move this far down? A little hiccup right here, but for the most part, it looks like it's pretty clean coming back down. And this brings it back down to 109 or 101.60. So again, a what 80-cent drop absolutely could happen. 80-cent drop is not anything that's out of the ordinary. So that one could move. Kind of already in at this point though. And again, rallying back up into it. Let's see if it holds and stabilizes up here. Actually, could have shrunk this a little bit more on the 1 minute. I could have shrunk it into there. Um, there you go. Right on 1 to 3. So yeah, there's our base. And again, close to the 50, but that's kind of where the test is. So we'll see. And again, last week this was 952. This thing triggered. So again, 1024 is much better than what we normally have. Natural gas. Natural gas is pulling back a little bit, which is fine. Um, this is what it's looked like. And we talked about this level all the way at top. We kind of just ran into it. Again, there was a 23.6 I mentioned yesterday. Listen, I think you have to stay long. Am I happy with it back up to 630? Not really, but I just think that this is Russia's ultimate weapon right now, right? This is Russia's ultimate weapon is natural gas. Um, Trying to think where even. I mean, I guess if it does roll, I mean, it's getting buyers to go higher now. I mean, I guess if we do roll here is probably our downside target. Um, you know, like I said, from yesterday, it did have a 23 continuation. Right now, the 23 is it's a little bit front run. So I would say if you are looking for more of a push, I would say that 613.3 is probably where you want to go long, but there will be some sellers up top. I don't know. I mean, and again, I'm mostly technical trader, but on a fundamental basis, with everything that's happened, this is a geopolitical trade right now, and I don't like geopolitical trades. I think this has the potential to go higher. I hate to say this, but I feel like if when Russia, I think Russia's next straw is just to cut gas off. Um, And what are you going to do? Like, you're going to say that, oh, you're attacking the population because you cut off gas. It's like, you already told us you're not going to pay in rubles. So what do you want us to do? Like, we're not going to jump through hoops that give you gas. Like, you play our game or you don't, right? We tried to play their game, and Russia tried to play their game and make their bond payments like they were supposed to. They had a contractual obligation, and the Western world is like, no, you're not going to pay your bills that you owe us. Okay, but Russia is not going to be like, you're not going to pay in rubles. I feel like this story's not over. So I do think it has the ability to go much higher. Gold. So you're seeing gold's chopping back and forth, right? Gold's getting very choppy, choppy. Again, the 50. I don't think this level holds. It's one of those levels that there's kind of two sitting there. And again, we did have basing. Oops, I shouldn't have deleted that. There you go. You can see we have the basing level below, and we've touched, and we 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 touched. I'm kind of looking today for gold to come back down into 1890 or 1889.30. With it kind of being pushed higher, again being inflated here. It's great that everybody's like, yeah, go to gold. Yeah, gold. High inflation, gold, right? Bonds are getting blasted. Okay, there are bonds market. Put it this way, gold is kind of like a speculation play. It's a way to, again, you should get into gold before inflation happens, not after the fact. The fact that bonds are dropping this much, they're like, you're about to jack interest rates. Put it this way, if you talk about who's investing in what, rich people are known for bonds. Like the ultra rich, all they have is bonds. They don't do anything in the stock market. It's all bonds. Seeing bonds take a hit this big, they know things. So I'd be looking for shorts on this one. Again, you can wait till we get a little bit closer, but I think getting short gold before the release today is probably what you want to do. That release is coming in right there. So again, if we can drive down, I think ultimately, 1889 is on the books for today. Silver up a little bit, but I think it's kind of doing the same thing, right? It came back up that 24.50. It's a popular level, again, psychological level. I think silver gets down to 24 today. Also, right now is about a 50-cent runner in silver. So, I mean, for you silver traders out there, and if you're looking for a reason, you can draw fibs and be like, look at that, it came back down. Yeah, it did. right? And it's back up again. Obviously 25 is a big deal. 24 is a big deal. Being at 24.50, you're obviously at a 50% retracement. So if you're looking for a reason to get short silver, I mean, you can justify it that. There is a wick, there is a wick over wick there. You can see that, look, see the chop right here, right? You can see that there is a level sitting right there, and that's what we're going off of right now. So, if you need a reason to do it, there is a reason to get short silver. And again, I think it makes sense. Um, VIX is now, VIX is at 16.5. So, yeah, 16.5. So, again, not looking good. Here's what we talked about earlier today, right? We talked about on the 15-minute chart. We talked about getting into a 23 pullback in the overnight. Again, expecting they were going to drop it. It missed it by just the slightest of areas right at 9:30. Yeah, there. I'm sure there was some pipette streamers out there. They were like, "What the heck is this crap? Really?" Yeah. I mean, I guess if they wanted to hit, short at the open, knowing that it was going to go back, right? Because everybody knows, right? After the fact. Um, I guess they, if they use that as their style, I don't know, but I'm sure some of them lost out on this one. So, um, yeah. So if we move this down now, you can see that we have a new 26 level. I still think this one. I mentioned it earlier. Where is it? I think 44, 46 is on the books for today. We haven't hit it yet, but we're obviously the morning has gotten there pretty close. Again, I think you got to stay bearish. As she said anything? Nope, just barking right now. So yeah, I again, if you're not already short, obviously getting short at the open was or before the open was the play. Um, it's already happened. I don't really what to say. This is one of those ones that you should have got short at the open. Do I like the 23.6? No, I just think it continues to go down. May that be an entry area? Maybe. Could I see people coming in here with it? 44.70. Sure, if we can get that high. I don't know that we can rally back that much. So, but at the same time, if they have a super weak statement and they say something like, "Yeah, 0.25, it seems like it's prudent. We don't want to send the economy into a recession," this blows right through this, and we're back at 4,500. Um, just no evidence or buts. NQ, yeah, NQ had a little bit of a pullback at 9:30, kind of the same scenario. Like if you get short, there was obviously no trade setup. It pulled back. It was not a level. Yeah, I mean here's our target, 14,376. We're about 100 points away. I think FOMC can absolutely jack and hammer this one around. So yeah, same thing. Should have been short before the open. Nice move today, and again already out. YM also missed its 23 pullback. Right, 9:15, 9:15 is where this one took off. Since that time, though, actually since 9:30, it looks like 10:15 would have given you a 23 if you were really trying hard to trail this down and get a 23 pullback. It looks like you did finally get one. If you took it, you're kind of middle ground right now. And again, a little risky at 10:30 because if we do have a reversal in preparation, it will be now. Um, maybe you got in, right? Right there, right? I feel like this is a Ryan trade. I feel like if Ryan was trading futures this morning, I feel like this is a Ryan trade. He's the one that will put things like this, and he'll do that type of pullback trade. I don't know. We'll see. Look in the profit section later. I feel like this is definitely a Ryan. If this goes through and breaks, I bet you we see Ryan was in this trade. This one just screams Ryan. Yeah, I'd say YM is also in trouble today. I think this one goes down further. This one, we do know that there's levels here, and that's kind of what we bounced off of. So not necessarily surprised, but we did push in twice, and it did go pretty deep. So I don't really feel that this level can hold again. Let's pull this one off. There's a hiccup there, but I don't think that hiccup's going to hold. I don't think that hiccup can withstand FOMC. I don't know. Maybe once the days end. Maybe at 4:30, we have a little bit of end of day rally if it doesn't blow up. I just feel like that one's going to blow up. I don't really love it, but we got a couple small levels in YM, so there's some okay stuff here. So bigger than planned surplus. Look at that. 4 gas 59 came in. So let's see, what did oil do? and your oil trade is out. So there you go. So hopefully you guys were able to grab that one. You had some opportunity, but again, this one went about 8 minutes early, which is in the right time frame. So again, how to pre-position yourself ahead of time, right? 35-1, confirmed once, confirmed with fibs as number 2, and again, there you go. You are out of that trade. So it's almost like they knew. How did they know? Nice little trade setup there. And then Russell. Let's see what Russell did. I didn't pull this back around. Looks like Russell's just going off. Oh, this is a 1 minute. Let's go to a 15. I was like, why is there so many candles here? That's where we're on a Russell right now. Now, I do think, again, I think Russell is definitely a short opportunity before FOMC. Talking about slowing housing, talking about raising interest rates, all these things are not good. Talking about people not going out and spending money also hurts small businesses more than it hurts big business. Remember, I don't need to go. I don't leave my house to spend money on Amazon. For me to go to the mom and pop shop down the street or go out to a restaurant, local owned, micro, any anything that's little, right? I gotta leave my house. If I decide not to leave my house because gas prices are too high and I don't want to pay inflated prices, that hurts all the little guys. So I would say that Russell is absolutely a short. I'd like to see where it pulls back to. And again, there'll be people that are sitting there shorting it right now. On a 5 minute, you can see that there is a level a little bit above. I don't love it, but again, this one would have reversed at 10 o'clock this morning, a little bit early. But again, with Yellen speaking, is there any headlines from her yet? I feel like I need headlines from her. Nope. I was really hoping. I'm like, just give me something. Oh, it's just crude oil. So, wah wah wah. She. Oh, this is the central bank. He's obviously on his computer. I was hoping we get more headlines from her, but looks like we're not. Anyway, we got 4 hours. Yeah. So again, I I don't think this is pulling back to a 50. If it can rally that far up, then heck yeah, I'm short the heck out of this thing at 2 o'clock today. But right now, obviously, we don't really have anything else. Traders will be going to lunch in an hour in New York. So again, I expect some profit taking from the early morning pushes, some leveling out. Look to see where the new levels are based at during lunchtime, and then look for some immediate movement at 1 o'clock, as there's that kind of last minute scramble before the FOMC meeting notes. Remember, there are people out there that already have these notes. It would be nice if the first time that they were actually released was at 2 p.m. But remember, there are people that have it. If you can, if you pay the Nancy Pelosi trading subscription to see what she trades on a daily, today would be the day to trade what she trades, because she's already seen the statement. So, yeah, uh, it should be illegal, but it is not yet. And again, it's another one of those things why isn't that talked about? Why is it that all financial services employees are not allowed to trade the market? Right? I cannot trade options on individual stocks because of Melissa's job. But why is it that senators can make policy and change things around and trade the market before it comes out? Right? The Fed was supposed, the Fed had to recently do it, but why is it not banned for senators yet? Oh, they make the rules. So another thing, those are my hot buttons right now, by the way, guys. Term limits on senators, right? Term limits on senators, and they should absolutely not be allowed to trade the market whatsoever. Zero trading, right? The president's not allowed to trade, right? President's not allowed to trade. Can't even control the own businesses that he runs. But yet senators can do all their own stuff, right? Why is that, right? Wouldn't it be nice? Wouldn't it be cool if you could vote at your job? Be like, okay, you know what? I'm going to vote for what my salary is next year, how much vacation I'm going to get, what my benefits are, and you have nothing. You can't do anything about it. It'd be awesome to have that job, right? And you could never, I'm gonna be in the same job for 55 years. Like I have any, I'm like I'm, yeah, yeah. Those are my big hot buttons right now. All right. So with that said, let's go ahead and do drawing for today. Ernest won last time. I think that was a first victory for Ernest. So again, it is a 50 chip Wednesday. So Ernest is going for 100. Everybody else is going for 50 today, and we'll see how it rolls. Got Briggs in here today. Got Carol. Carol was first. Look at that. Carol was in first. Um, and by the way, I just want to let you guys know, there's, we don't give out a resilience award, but Carol has been trying to download MT4 for like 2 weeks, and I keep sending her links, and the links, it looks like MetaQuotes is finally trying to dump MT4. When you when you download MT4 from the MetaQuotes sites, it will tell you MT4 setup.exe, but when you install it, it is now MT5. So it looks like you can only grab MT4 now from actual brokerage firms who have licenses for it and who are allowed to change it around. So it looks like, MetaQuotes is putting that big push of like, that's it. No more MT4. Everybody go MT5. So yeah, we'll see. Anyway, let's close this down. Let's do the winner for today. Winner of today's drawing is Briggs. Look at that. Briggs had 3. Briggs was trying to buy it. Nero was compete with him. So let's go ahead in there. Let's go over to leaderboard. We got to figure out where my man. Actually, I just go down here. There he is, right there. Let's give him his 50 pip chips. All right, using 20 to get 50. There we go. Did that put you back over? Let's see. Mitch has 400. Nope, you're down a little bit. So you're close. You need another big winner. So you can only get more from a broker. Yeah, you can only get it from a broker right now, Sean. No, Sean, you used to be able to get it. Actually, less than 6 months ago, I got it from the MetaQuote site. They're not happy about it, but they have to do it. So, as well as, I forget what other broker, another broker, another broker does the same thing. Their download, when you go to download the MT4 client, it says, it says what client do you want to use in the broker. Actually, it's one of the managed accounts. Its download link is actually the MetaQuote site, so you've been able to download it through them, right? But they've actually updated it now too. So behind most of what's going on. I know it's all Neuro's fault. It's all Neuro's fault. So, all right. With that said, I'm out of here. Look at this. Everything is starting to stabilize now, and everything's trying to position itself for 2 o'clock today. So, have fun at lunch. Get back to your computers around 1:30. Look for the craziness, and then again, get your appropriate positions before then. So, with that said, I'm out of here. Thank you guys for today, and again, I'll see you tomorrow. Take care.